Good day, good day, and welcome. This is Howard Martell, known as the Home Profit Coach here in Hampton Roads, Virginia. Today, I'm going to be talking about a very important topic. We're going to talk about simple money basics, compound interest, index accounts, and retirement accounts. Hello, everyone. My name is Howard Martell, former U.S. Navy, retired from my first career at age 39. I'm about to retire from my total 30-year cybersecurity career, not by choice, but by cutbacks. The government's deciding they want to move in a different direction. I decided I wanted to move in a different direction. So as I'm excited to announce on the 29th, will be on the last day working for my incredible company that I work with, that I consider my little family. Yes, I'm getting some severance from it too. After the 29th. But I'm working on other streams of income that's going to not only help myself and my family, but also educate you about financial stewardship. So, a little bit about myself. My last 2 years in the military, I was what they call a command financial specialist in the Navy. It was an honor. It took me 18 years. They're very particular in who they choose. You have to good credit, be very transparent because you're dealing with people's finances and understand that, hey, you're going to go to school, but then you got to self teach yourself and understand that your job is to take care of the sailors who need that counseling so they don't waste those precious dollars that they work hard for. It's the same thing with your family. So tonight, I want to break down some basic financial terms in simple language. Compound interest. Compound interest is why people call it the eighth wonder of the world. Einstein calls it that. Index accounts. What are they conceptually? And living benefits, how they differ from old school life insurance and the difference between 401k, Roth, 401k, IRA, and Roth IRA. I'm not here to overwhelm you. I'm here to educate in plain English so you can make a better decision with qualified, insured professional. That's right. I'm also a home-based business owner earning residual income from two businesses that are scrolling down below and in the description. So we're not going to talk about too much about that. But I believe in multiple streams of income and maximizing those tax dollars. But this stream is about education first. Compound interest. This is going to be a simple example. First, compound interest. Compound interest is simply earning interest on your principal, your original money, and on the interest you already earned. So your money grows on top of itself over time and over time and over time. Here's a simple example. Let's say you invest $1,000. It grows at 10% per year. Just a simple example. At year one, 10% of 1,000 equals $100. At end of the year, you got $1,100, right? Year two, you can earn 10% on that 1,100 and not 1,000. 10% of 1,100 is 110. At the end of the year, you're going to $1,210. Simple example, simple math. The second year, your interest grew without you adding new money. Over many years, that curve gets steeper. That's why Einstein is often quoted as saying the compound interest is the eighth wonder of the world. Time plus rate of return plus consistency equals powerful growth. Key idea. The earlier you start, the more consistently you add, the more time you give your money to compound, the less you have to rely on last minute miracles. Now, let's talk about what is an index account conceptually. When people talk about index accounts in financial education, they usually mean an account where interest credited is tied to a market index like the S&P 500. But you're not directly investing in index like a mutual fund or ETF. The idea, when the index goes up, you get some of the upside credited as interest, usually subject to a cap or a participation rate. When the index goes down, there may be a floor, often zero. So you don't get a negative interest from that index for that period. So you see, it makes sense, right? Here's a very simple concept example. Let's say you put $10,000. The account has 0% floor and 8% cap. This is just for teaching. Year one, index goes up 12%. You might get the cap at 8%. Balance becomes 10,800. Year two, index down 20%. Your credited interest would be zero. So you put zero in that bucket. Because of the floor, you still keep the 10,800. Now, if you were to do that and leave it in a 401k, you're going to take that loss. See, that's the beauty of the accounts. And now these account types with these insured vehicles, they allow you, or shut up vehicles, but insured policies, whatever you want to call them, right? The terms of that allow you, typically it's capped at 11%, right? But say and goes up above, they keep the rest. But see, it's fair because you can't get 11% in your bank. You can't get in the CDs. Um, I can tell you one thing that I do personally myself, speaking off topic, I've been investing in precious metals, God's money, for a while. Why? Because it is a tangible, hard asset. And when the crazy times that we live in the world, where we are discovering so much fraud, waste, and abuse coming from not only our governments but all these states, they they wonder why Americans are so mad and the 18 to 29-year-olds are really mad. So you need to definitely look at who you elect in your state elections. I'm just saying, this is not a political message. This is a message to tell you if you want your dollars to work, don't trust a politician. Okay? Don't hold them accountable. Blow their phones up saying you need to investigate all this fraud because this is money that I put into the system. Every single one of us are taxpayers. So we're basically paying for legal activities. But this has been going on for decades. It's being exposed at a massive godly level, and I love it. But I'm protecting my wealth by becoming my own bank. Silver went up 147%. You want to know who I use? KEPM.com. Dr. Kurt Elliott. Okay? Dr. Kurt Elliott. Plain and simple. All right. I love it because Dr. Kurt is equally yoked with me. I've been using their approach for 2 years, and I love it. And 147% increase, people. And I talk about this in my other videos. I'm going to give you basic education because I've learned a lot along the way, and this is going to help me also. All right. So let's go to year 3. It's up 5% under the cap. You might get the full 5%. That's about 11,300. So you see how your money is working? These type of accounts have been around for 200 years. The ultra rich have been using it for a while. So why don't you use it? And we can show you how to do it. It's not guaranteed, and the real products have fees and rules, but the concept is trade some upside in the big bull years for protection in the bad years. These can be found in certain index annuities and index life insurance products, which is why you want a licensed professional to walk you through the exact details. And guess what Howard's going to be doing here in Hampton Roads? If you want to reach out to me once I get my license, I will be sharing that. And it's a simple concept. We're going to educate you. Then you, the consumer, decide, hey, do I want to work with Howard? In his, I'm going to tell you, we're clients of theirs and we love it. We sit down with our agent every single year and go over how we're doing with our stewardship dollars. And I'm telling you, it's been a blessing, and it's financially setting me up for if I was to die first, my wife don't have to worry about anything. It's all taken care of. If I get really sick, we're going to talk about that. That's the power of this program, and I'm part of it. But once I leave my cybersecurity career of 30 years, like I talked about, I'm going to be part-time, taking care of my health, of course. I've got some things going on with my VA disabilities that I'm working on right now, but I'm going to be learning from people that have been in the industry here in Hampton Roads for 15 years. And to me, that is God's call for me to help educate the 83% of the 250 million across our great nation, to make sure that you're taking care of those dollars so you can leave a legacy for your kids, or God forbid you get sick. Most of us are going to get sick. We live in a sick nation, but we can stop that. It's called stop eating garbage and put great things, get moving. That's what my doctor told me when I was doing my sciatic nerve pain. I've been moving. 6 days I've been going to the gym and I feel incredible. Was a little sore the first day, but I'm just doing light weights and I'm using the base gym and all the tools at my disposal, and it's costing me a few gallons of gas to go. That's it. Living benefits versus the old school life insurance. Let's talk about living benefits. Traditional life insurance was often seen like you die, your family gets the money. That's a death benefit only. Living benefits refer to a certain modern policy that may let you access a portion of your death benefit while you're still alive. If you qualify in conditions like certain chronic, critical, terminal illness, depending on the contract. The idea, the policy isn't just for when you die. It can also be a financial tool while you're living if something serious happens. Compared old model, benefits mostly after you're gone. Living benefit model, potential access to funds during your lifetime. Can help cover medical, long-term care costs, and depending on the terms. See, the importance of this is that the biggest thing with our medical costs is that staying in the hospital can bankrupt people. This is your life insurance policy that will allow you, in particular cases, you and your family, to borrow against that and to be able to and pay the bills and not get foreclosed on and not declare bankruptcy. So isn't it smart to definitely look into it? Living benefits are not all the same. You need a licensed agent to explain what triggers them, what's covered, and any reduction of death benefit. That's what we do. But conceptually, the old model, my family gets help when I'm gone. Living benefits, there may be help even if I'm still here, but hurting. Now let's talk about 401ks, Roth 401ks, IRAs, and Roth IRAs. Simple difference. Let's go through the big four: 401k, Roth 401k, traditional IRA, and Roth IRA. Think of them as buckets where you put investments. Your 401k is your traditional, offered by your employer. Contributions should come out of your paycheck before taxes. Money grows tax deferred. You pay income tax later when you withdraw your retirement. The only bad thing is, what's your income going to be? What is your tax rate going to be? The way our government is being so inefficient with money. Now, this current administration is shaking it up as disruptors, and I love that. They're trying to put more money into choice of the American people, medical choice. Why the heck did the government get involved in the medical business in the first? Why did we bail out the loans? Because if they didn't, even the car dealerships, if they didn't, there would be massive job losses and a huge deficit. But we have a huge deficit. So Howard, as a good steward of what God has allowed me to have, he has allowed me to be able to speak into existence all these things, but these things have been around before Howard was created, right? It's just a matter of how you use these vehicles in a right way so you can live in a tax advantaged, which allows you to protect those stewardship dollars. And each time that you get paid every 2 weeks, you get paid every 2 weeks or 1 month. Those are spiritual deposits in God's kingdom, whether you believe or not. He gives you the time, talent, and ability. Your traditional 401k, as I said before, offered by your employers, contributions usually come out of your paycheck before taxes. Money grows tax deferred. You pay income tax later when we draw from retirement. Often there's an employer match, which is free money if you take it. I had a 3% match myself, and I accumulated a nice 401k. But guess what I'm going to be doing? Eventually, I'm going to be taking that 401k and all that money and putting it into a plan, just like I did for me and my wife 2 years ago. And I'm going to double that money with God's stewardship dollars. So you see what I'm doing? I'm taking money that I earned with the matches, and I'm going to make it into a tax deferred vehicle. Makes sense, doesn't it? Get with a licensed professional. That's the key. Get with a licensed professional. They have the ability, and I'll have the ability once I get my license. I'll be studying for that very soon. And I'm passionate about this. I want to educate so many people because I've been blessed with a lot of financial discernment about money. And I believe this is something that the church needs, our local communities need, the underserved. The underserved is doesn't matter if you're a minority, you can understand how money is. And the problem is that we live in a entitled, America lives high on the hog. I'll be honest with you. We have our houses are huge. You go overseas and stuff, and like Japan, they have smaller homes and stuff, and they live fine. Yeah, they're cramped in the subway and stuff like that. You see all masks and stuff, but see, we have so much waste. You don't need all this space, right? I have a 1633 square foot, uh, two level, in an HOA community. We've been living here since 2007. We took some of those spiritual deposits, and we were able to be blessed by my wife's parents to be able to get a inheritance that paid for a specific amount. So we already had equity in the house. So I only have like 10 years left to pay this house off. But I'm taking my sweet time because the rate is, I went from a 30 to a 15, and it's still lower than what the rates are. It's below 6%. And it's a VA guaranteed home loan. So I'm just taking those tax-free dollars I get and paying the mortgage and stuff like that. Now, as I do transition from a new career, I have to not pay the principal as much, but we know that we have some cushion coming along because most cars are paid off, the maintenance is done on them. We know that we're probably gonna get some money back from taxes from the state because me being a veteran in Virginia, they have capped it at $40,000. Now, that's for my pension, for state and local. I still pay, federal tax, but at the end of the day, it's not that bad because I pay all my medical and my health insurance and my dental and my vision through my military pension. Now, pensions are something that have been around for a while, but the military has stopped giving those. They offer a 401k type of match using the thrift savings plan. So if you are in the government or the military, I definitely want to help you. I'm going to tell you, I took my 401k and I put it into a similar plan. I think I took some of the money actually. I got the tax free version. Some of it I had to get a check basically because that was tax free, and the rest was taxed. But it wasn't that bad. My taxes didn't ended up be that bad. It really wasn't. So the key here, people, is you got to understand how your money can work for you. We talk about this work at work a lot. Me and my coworker and stuff. We talk about it. He's older than I am. I'm going to be 53. But what I learned along the process is that knowledge is power, but understanding how your stewardship dollars work, which means how can you take the power of compound interest, which I covered? How can you take things like living benefits when you get sick? You can borrow against it if it's terminal, and it allows you to borrow about a certain birth. That allows you to you can sleep good at night. What makes me sleep good at night, I'm telling you, is that silver right now. It hit $103. Gold just hit 5,000. Think about it. When they call me up at Dr. Kurt Elliott, they're going to say, "Hey, Howard, we're going to take some of that profits," and the profits are immense right now. I'm telling you, it brings joy to me that I can share this. We're going to take a 50 to 30% of that. I'm going to buy gold. So you see what I'm doing? I'm taking those stewardship dollars and repurposing and buying more so we can build kingdom culture together. So it's my passion to be able to help people using all I'm going to be calling, you can call me a professional inviter. I'm going to invite you out to an event. It can be either live. I prefer it live if you're local in the Hampton Roads area. And that's it. You come, you listen to a 1 hour presentation. You're getting fed. It's being paid for. Yes, it's being paid for. Our agents pay for these dinners, and it's at the Westin in Virginia Beach. That's all I'm going to ask you to do. But first, I was told to get my license, and all you're going to be doing is inviting. And then my mentor will be guiding me step by step how to help you save more money with the current money that you have. So doesn't it make sense to get with me and I can help you? Just saying. So I'm going to be doing things like this because this is what I want to do is I want to educate so many consumers about how I was educated, right? I'm reading books on it. As I said, I'm very busy, but I'm concentrating on me and my family, replacing some of that income. Yes, we have all 50 states are covered, right? But I'll be insured in Virginia once I pass my test. That's it. Once I pass my test, I'll be studying for it after next week. I'll be studying for it after Thursday when I step away from that career that I had before. I'm going to go into a fulfilling where I'm going to do it part time or how many hours I want to do it. And all I'm going to doing is inviting people and allowing the testimony of our incredible team to be shared with you. And it's in 1 quick hour. And it's powerful, very, very powerful. And this day and age, people are looking for multiple streams of income. And yes, I'm going to tell you, at the end, if you're not impressed with it and you want more information after dinner, you fill out a simple survey. It's as confidential as that. Well, what I love about it is that when those people fill out those surveys, from what I'm hearing from the field, people get it. And we sit down with you confidentiality and sit down like me and my wife did with our agent, who we were introduced to by another agent who I'm on her team. So I'm going to help her and her family. And she's helping me already because of the benefits that we get. I'm not telling people quit their full-time job. No, don't quit your full-time job. See, I'm in a financial situation where I can do that because of health things and other things going on in my life that I have to take care of me instead of the money and working for somebody else's dream. I'm working for your dream, and I'm also taking a portion of it and I'm using it for my family. But I want to leave a legacy in Hampton Roads that, hey, that Howard Martell, he served his country, but he's also serving his community and showing people the benefits of having. All right. So for your Roth, it's also employer based, but contributions are usually after tax. You pay taxes now on contributions. Growth inside can be tax free. Qualified withdrawals in retirement can be tax free under current rules. Big picture: traditional 401k, tax break now, pay later. Roth 401k, pay now, tax later if rules are applied. Traditional IRA, individual retirement accounts you open yourself, bank, brokerage, etc. Contributions may be tax deductible, depends on your income and if you have a plan at work. Grow, tax deferred. You pay income tax when you draw it in retirement. Roth IRA. Contributions are usually after tax, no deduction now. Money grows tax free. Qualified withdrawals from retirement is tax free. Again, under current law and rules. Simple ways to remember. Traditional 401k. IRA equals you get a tax break now, but pay taxes when you take money out. For Roth 401k, Roth IRA, you pay taxes now, but qualified withdrawals later can be tax free. Which is better? It depends on your current income and tax bracket, what you expect in the future, and your goals. That's where good financial education plus licensed advice come in. Let's tie this in. Multiple streams in my business. To wrap up, I want you to see all this as a big part of a picture. Long term, compound interest, index strategies, retirement accounts, short term, medium term, building multiple streams of income so you're not dependent on just one paycheck. That's part of why I run my own home based business, teach others to do the same. At Home Business Success 5000, I have AI tools and online tools to build and grow a home business and content faster. That's what I love about it. And one marketplace store, my curated online shopping hub where you can support what I do for shopping through my affiliate store and you get paid to shop. And in return, you get shopping dollars that go back into the system where you have to use it to purchase things through a store and we both get paid from it. So those are two ways I earn residual income alongside the long-term strategies I just talked about. My goal is not to push products first, it's to help you understand the game, how money grows, what tools exist, how to build extra income ethically and wisely. If this is helpful, like the stream, share it with someone who never got this kind of financial education and drop your questions in the chat or comments so I can cover them in future streams. So does anybody have any questions on this? I know this is very powerful. Please like and subscribe also. So, was this helpful? You're in Albania. Gotcha. Okay. With that being said, take care. God bless.